Hey guys, welcome back to my channel. My name is Silvia Berok and today we're going to be talking about the current stock market situation. Is this rally a bull trap? And before we start guys, check out my website silviaberok.com and my free trading kit. Now let's check out the current situation and discuss the most important levels and also talk about possible setups and trades here. We discussed a while back the market as we were around those lows, and I've been mentioning that as long as we hold those support zones, most likely we're going to see a bounce. Unfortunately, this happened right before Fed, and that was of course not the best situation and spot to buy at this point. But as I've been discussing a lot of times, guys, you always have to think outside of the box. If things are too obvious and if you think that we are going to continue further lower and bad news are happening, increasing of rates are happening, normally the opposite happens, at least for a couple of days, because that's how the stock market works. The majority of the people are the majority of the time wrong. So now going with that, let's see what are the current levels on the S&P 500. We held pretty well support, bounced off this zone, made a nice double bottom, green candle, which was the confirmation for a long setup and continuation for a couple of days higher. Now we reached a very important resistance zone, and we also have here in the way the 200 exponential moving average, which I personally like to use. By the way, guys, for those of you who are most likely going to ask me what are the indicators which I am using, I use the 200, 50, 20 and 9 exponential moving averages, as well as the RSI. I use those only as a guide. I personally don't trade based on signals, but I use them to identify sometimes important support and resistance zones and also sometimes trends. So again, we're here right above the 200 exponential moving average. That was a bullish sign. We bounced back pretty fast, and that's been like 6 days in a row straight green. And based on the current level and based on the situation that we saw a very fast bounce, that was like 10% bounce on the S&P 500, I do expect to see a little bit of a pullback here. So going into the next days, I personally don't want to long that because my probability for success is not very high. Of course, I'm not saying the market is going to crash or continue lower. What I'm saying is that in trading, you always have to start thinking, guys, based on probabilities, based on levels, based on risk to reward. So if you have a bounce like that for 5 or 6 days in a row, couple of percentages to the upside, most likely you're going to see a slowdown of this bounce. You're going to see either a sideways price action before we continue higher, or we're going to see some decent pullback. So in my opinion, based on that, we're here at an important level and we might see a pullback probably into this zone, maybe here around into the 9 or 20 EMA for a couple of days, and then go back and try to continue higher. So based on that, I don't want to buy at the top, of course. I'm looking for a pullback, and then I will look for potential continuation of this bull run. At the same time, while I'm waiting, of course, for this pullback to happen, what I can do is short the market, and that's exactly what I did. But I didn't use the instrument S&P 500 in this case. I just used the QQQ. Let's take a look at the NASDAQ. So the QQQ is actually a very nice instrument to trade as well. I personally like using it, like trading it a lot. It's very volatile and you can catch definitely decent moves. And for those of you guys who like to trade that, there are also triple ETFs, 2 times ETFs, which are as well very, very good, especially for small accounts. So let's check out how can you trade that as well. Before we continue further, as we see here, we are as well at a very important resistance zone, 355.92. So that's the previous high here. We have some room into this zone, 369, and this is the previous 200 EMA. But again, based on this straight up move and based on this double bottom, I do expect to see a little bit of a slowdown here. Now, if you don't want to short that, or you don't have, guys, account for shorting, I know a lot of you don't short and don't have accounts to short. what you can do is you can use the reversed ETFs and long them. So for example, instead of shorting the QQQs, what you can do is you can use the SQQ, which is the reversed ETF. And we see here as well, we are at a very important support zone. You know, that's the reverse ETF. Normally when the Qs goes up, this one goes down, and when the Qs goes down, this one goes up. So you can use that instead. And we see here 35, 24, very important support zone, previous resistance zone, broke out, tested 2 times, 3 times, 4 times now. So we might see a bounce of this zone here. And that's exactly what I'm looking at, and also I traded it because we have a very good risk to reward here. So we are looking at a stop loss. So if you enter at 36.54 and the stop loss is at 34, so you have $2 stop loss for a potential bounce to 40. So this is a decent risk to reward. And that's why I took this trade. So I longed that one, which is, again, that's the same if you're shorting the Qs. If you don't have an account for that, that's a good option to do. Another option, which not many are talking about, is using the S&P 500 SPXS, for example. So that's the exact same thing. That's the triple ETF for S&P 500. And it is a very cheap option if you guys don't have the account for, you know, trading the SPY. Those moves, of course, much faster, 3 times faster. So this is not meant to be a long-term trade because the prices are being rebalanced. So it is a little bit different compared to the SPY, but it is a very, very good option if you have a small account and you cannot trade the other ones, or if you cannot short, you can use that as a buy. So again, the ETFs for that, SPXS and SPXL is for the S&P 500. The reverse is the SPXS. So that's how I see the current situation. I do expect a little bit of a pullback, like I mentioned. Either of those looks to me the same. So the Nasdaq, S&P 500, it doesn't really matter which one you're using. We can check also the Dow Jones, DEI. Same thing, came into the previous resistance zone. 200 EMA in the way, we rejected here, and it looks like we might continue further lower. So those are the zones which I'm watching. If you guys have any questions, feel free to ask me or contact me at any time. I hope you are doing well with your trades. I hope also you watched the previous videos with EGY and also the other videos which I discussed, a couple of stocks. They've been actually pretty good. So thank you so much for watching. I'm looking forward to see you back on my channel soon again. See you soon. Trade well and disciplined, and stay safe. Bye.